B2B lending unicorn Oxyzone nearly tripled its profit after tax to 197 crore rupees in FY23 from 69 crore rupees in FY22. Over the same period, income surged to 562 crore rupees from 313 crore rupees. It also doubled its loan book, with total assets under management jumping to 5,578 crore rupees in the previous fiscal.
Homegrown pet food company Drools gets $60 million from L. Catterton, a global consumer-focused investment firm. The deal, which marks the first external round of funding raised by Drools, has valued it at $600 million.
Short video app Chingari lays off 20% of its workforce. 50 people of its team of 250 employees got fired as the company looks to boost long-term productivity and profitability, it told CNBC-TV18.
Google is looking for suppliers in India to assemble its Pixel smartphones as it borrows from Apple Playbook to diversify beyond China, Bloomberg reported. Google has initiated conversations with Lava International and Dixon Technologies, as well as Foxconn Group's Indian unit.
Singapore-based Grab is preparing its biggest round of job cuts since the pandemic. Bloomberg News reported the layoffs are set to be announced as soon as this week and are likely to surpass a 2020 round that shrank the staff by 5%.
A surprise leadership change at China's largest e-commerce company, Alibaba. Eddie Wu will succeed Daniel Chang as the new CEO. Chang will now focus on the company's cloud intelligence business. Well, those are the headlines we've been tracking for you this evening. The threat of climate change looms large, and there is an urgent need to make concentrated efforts towards decarbonization. On the hot seat today, we put the spotlight on climate tech startup NewTrace that aims to transform the global green hydrogen market. Now, NewTrace develops and manufactures innovative electrolyzers that aim to reduce the cost of green hydrogen production by over 60%. To tell us how, joining me now is its co-founder and CEO, Prasanta Sarkar. Prasanta, welcome to Startup Street. NewTrace manufactures and deploys electrolyzers that are key to the production of hydrogen. It is estimated that investments for hydrogen technology deployment must hit $1.2 trillion by 2030 in order to achieve net zero emissions, which represents a huge market opportunity for electrolyzers. So if you could elaborate on the pain point that you're solving, and if you could also give us some use cases.
Sure. Thank you, Shruti, for having me on the show. So in principle, hydrogen is a very important process and feedstock gas in the industries. In India itself, we produce around 5 million tons of hydrogen every year, then involved around 100 million tons. And primary applications are in the refineries for processing the crude oil, for making industrial chemicals, for making fertilizer, which is a very key component. And there are two major pain points. All the hydrogen right now is being produced from natural gas, which means that we have to import natural gas to make all the hydrogen. The second pain point is basically the billion tons of CO2 emission that happens because of this whole annual production of 100 million tons of hydrogen.
Okay.
Right. And this is basically what NewTrace set out to solve for, because if you have to stop climate change, we have to really build solutions for the larger industrial segment and give them a cleaner and greener solutions.
All right. So tell me, Prasanta, how NewTrace is making green hydrogen production cheaper, scalable, and more efficient. And if you could also elaborate on your patent-pending electrolyzer technology.
Sure. So for us, the task is very simple. What we want to enable is basically the production of hydrogen from water and renewable electricity, and which should be at par or at cheaper than the fossil fuel-based hydrogen. And I think that then we have done the job. What we do is basically we leverage advances in precision fluid engineering to kind of produce and separate the oxygen and hydrogen, which means that we have developed the whole core technology indigenously in our country. And we have no dependence on any of the rare earth metals that the typical electrolyzer would have, or has any dependence on any critical components for which the supply chain is broken. So the whole core of technology, starting from the electrodes to the whole stack, has been developed by us. From really readily available material, which means that we have drastically reduced the capex of the electrolyzers while also improving the operation efficiencies of the system. So for every unit of electricity that we are supplying to the electrolyzer, we are producing more and more hydrogen.
Sure. Also, you know, Prasanta, the National Green Hydrogen Mission was approved by the Union Cabinet in January last year with the objective of making India a leading producer and supplier of green hydrogen in the world and the creation of export opportunities. So what are the bottlenecks in achieving this target? Can you elaborate on the supply chain challenges?
Sure. So when the National Green Hydrogen Mission was discussed, there was discussions about mandate for industries like refineries and fertilizers. But it was never implemented because the major challenge was there were not enough supply of electrolyzers in the country to really scale those production of green hydrogen and offset the fossil fuel hydrogen. So this is what the industry has realized, that there is not enough electrolyzers. There are very few players who can manufacture electrolyzer. It's a very complex technology, and the supply chain are controlled by a few global players, and there is not enough supply of critical components and rare earth metal. So this is where the challenge would be in terms of finding those alternative technologies that has no dependence on any of the rare earth metal. It's something that we are trying to do, and also has no critical components reliance. What we also have working on is basically developing the local supply chain and vendor network in order to make and elevate their quality, the processes as per the global standards, so that we have enough supply, which is also creating business opportunities and employment into the market.
Sure. Now let's quickly talk about the recent fundraise of $5.65 million that you raised. Now with the fresh funds, tell me, how do you plan to drive expansion of Nutrace's electrolyzer manufacturing and deployment capabilities in India and the world?
Sure. So we are focusing right now on scaling our manufacturing. Making one unit is very simple. How do you make thousands of them in a year? And deploying at different parts of the country, as well as global deployments that we are planning towards the end of this year. Manufacturing itself is a very highly capex infrastructure game. And we are going to deploy a lot of this capital on scaling our manufacturing processes, solving for those supply chain and vendor capabilities, building redundancies in supply chain by finding alternatives, heavily investing on research and development to really improve the product and really make sure that we are making an industrial workhouse, while streamlining the process for global deployments across US and Europe.
All right. One final question, if you could answer that quickly for us. Take me through the kind of partnerships you've built so far. What are the current business growth numbers, the reach that you've had so far? And again, I believe you're also looking to expand your solutions for long-term storage and conversion of green hydrogen and ammonia. So if you could elaborate a little bit on that too.
Sure. So currently we focus on working together with sectors like refineries. We are working with leading refineries, fertilizer units. And also there is a lot of interest that comes in from the mobility sector, and which is the long-haul mobility for trucks, buses, ships, and planes. And a key requirement there is a storage, which is a very difficult problem to solve. So we are working with different partners in order to find innovative processes of storing hydrogen and utilizing it, just like how you fill up a petrol and diesel tank. So these are some of the work that is currently under development. Ammonia is also one of the interesting challenges where hydrogen can be converted and shipped for longer duration to regions where energy is not very easily available. So a lot of different challenges there which we are trying to address as of now.
Absolutely, and we wish you the very best for that. Many thanks, Prasanta, for joining us on Startup Street. It was a pleasure talking to you.
Thank you very much for having me in the show. Thank you.
And moving on, Hopscotch, an Indian brand offering fashion wear for kids, has raised $20 million in a funding round led by Amazon. Now, the startup Series E financing round also saw participation from existing investors, including IIFL Seed Venture Fund, RPG Ventures, Lion Rock, and Tech Pro Ventures. Facebook co-founder Eduardo Saverin also invested in the round. Joining us now to discuss the fundraising plans and the road ahead for the firm is Rahul Anand, the founder and CEO of Hopscotch. Rahul, thank you so much for joining us on the show today. Like I said, you're a kids fashion brand, and this market is a highly competitive one. You compete with the likes of First Cry, Baby Hug, and Love Lap, to name a few. So take us through how you're staying ahead of competition and what do you have on offer?
Sure. Thanks very much. So it's a very exciting time for us. We feel delighted and excited to have pulled off this round of financing in a pretty challenging market. And as we see the world ahead, Hopscotch is one of the top kids fashion brands in the country, both in terms of size, in terms of the love that we get from customers, our Instagram base, everything's sort of exploding, right? And given we've been bootstrapped for really long, what we hear from customers constantly is they want more of Hopscotch, right? We operate in a select set of categories where we're strong, and we have many gaps. And so we're going to listen to our consumers, fill those gaps, and scale our top line. Then I think in parallel, India is a vast country. It's huge. Kids fashion alone is probably 120,000 crore opportunity out there. And so the market's pretty big and it's growing. We're seeing a lot of premiumization of the category happening. And there's a lot of pent-up aspirations among Indian consumers as their incomes grow. They want to give their kids access to selection they never had access to.
Right.
And that's when they turn to Hopscotch, right? Because we give them more than any other brand out there from a fashionable from a fashionable design perspective, from a quality and price point perspective. I think those are the three dimensions that we focus and we'll continue to do so going forward.
So like I said, you've raised about $20 million. So it was led by Amazon. Talk to us about what that backing means for you. And how do you plan to spend the funds? If you could quickly tell us what are the new offerings you plan to launch?
Absolutely. Let me put it in perspective here. I touched upon that we were bootstrapped, but I think this is by far the single largest round of financing that the company has ever had. We're extremely grateful and excited at the same time. And I think we're going to do two things, right? One, Hopscotch is a brand that's synonymous with a lot of the special occasions in a child's life. It's a brand that moms have systematically turned to for those special moments. It could be a birthday, it could be Raksha Bandhan, it could be Diwali, it could be Eid, it could be any festival, it could be seasons, right? So we do these special occasions extremely well, which are the hardest to do, right? These are the categories that people call the more fashionable ones, but they're also the riskier ones. And we built a very strong model there that others have struggled and failed for, right? What we don't do is the real meat and potatoes of the business, right? Which is the basic homeware, the playwear, the everyday wear. And we're going to double down and we're going to do that better than anyone else, similar to the way we did with fashion.
All right.
And move forward, right? So we're quite excited.
So you're going to double down on what you're already good at. So you're a digital brand currently. What's the kind of demand you're seeing on your app versus the website? What's your best-selling product? And what's the average ticket size of your orders? Is there a plan to go offline apart from just like your online strategy?
Sure. So the online metrics in our business are pretty strong. 85 to 90% of our revenues emerge from our own direct-to-consumer storefront, right? The remaining 15% is online, but from third parties. And I think in addition